Ready to get the inside scoop on equity funding? Tune into TDJ Equity Funding Insiders Podcast for an in-depth look at what it takes to access financial capital and maximize your investments. Hear from experienced professionals, including bankers, underwriters, loan officers, and industry experts as they share their unfiltered stories and valuable lessons on securing funds.
All right, we want to thank everybody for coming to our series of Giving Power to the Business Owner. And today we have a special guest. We're actually going to be talking about factoring, lending, basically, or finance. I know the guys, you all kind of, Travis, you guys kind of call it a little different. Padilla, we want to actually welcome Travis to our show, and we are very excited about what he has to say. So let me say something a little bit before we get started. One thing we find out, there are so many different loans out there that you could do, so many different instruments that you can do. We're finding out as loan brokers here in Texas that a lot of people are not familiar with how the factoring works. You do have those industry that really know, but we want to introduce that to a lot of people to know it is a great alternative for you. And that's what Travis is going to go through. He's going to tell us a little bit about it and how does it work and how do we need to use it, which is really good. And so what I want to do, Travis, besides welcome you to the show, I would like for you to introduce yourself, give us a little background on what you have, and we can go from there with our questions.
Yeah, thanks for having me. I really appreciate the opportunity. Factoring itself and helping small businesses is a passion of mine. I've been doing it for quite a while, about 20 years now. I started in factoring with a small finance shop. We were kind of independently owned. We had about 20 employees. And I started as a collector there. And what my job was to basically collect on companies' accounts receivable. And, I have lots of crazy stories from that, but that's just one piece of it. I remember calling delis in New York, asking them about invoices, and it was during lunch rush hour and they had no time for me, and that didn't go well. So after I did collections for about a year, I moved up to an analyst position. And my what I did there was basically, a company would send in these invoices. Then as an analyst, what I would do is I would go through all the documentation, whether it was bills of lading, proof of deliveries, timesheets for staffing companies, all sorts of different stuff. Right. And so I would go into those invoices and take a look at them and make sure that they were good for invoicing. Right. Eventually, I moved up at that place for a relationship manager position. And then that's kind of the position that a lot of businesses interact with because basically it's your job to manage that relationship, almost like a banker in a lot of ways. We're learning about the business, learning about their business, managing that relationship and making sure that, the loan is performing well and all that kind of stuff. After that position, I moved over to a bank that does the same thing. So, banks are very different than independent factors. We'll get into that in a little bit. I managed a pretty big portfolio, something close to home to you, oil field services. It's a great industry within factoring, and we do a lot of business within oil field services. After that, my journey kind of took me a little bit different route. I became a customer service representative for one of the major softwares in the factoring industry. And so I was able to interface with a lot of different lenders, over 100 independent lenders, large banks, and everywhere in between. So, my industry knowledge over the years has gotten me to the point where I know a lot of people, I know what they're doing, and I generally know how factoring works. Right. Currently, right now, I am director of sales for a factoring company. So we work with small businesses every day to try and find the right solutions for them. Factoring isn't the right fit for everybody, but again, we'll get into that a little bit, and just that's a brief snapshot of my career within the industry.
And thank you so much. And like I've already told you, that's why I'm so glad you came. You have a wealth of knowledge about factoring. And that's what we want to actually talk about. So to get this started, what exactly is invoice factoring? Because I noticed you mentioned that. And how does it differ from traditional bank loans?
Okay. So with factoring, there's a lot of different words for it. Some people call factoring the F word, and people don't like using it. I say factoring way too much, but factoring is invoice, receivable financing, AR financing, anything you want to call it. So really, how it differs is we're taking invoices that you generate as a business
Okay.
to another business. And instead of waiting for 30, 60, 90, I've seen 120, 180 days even,
Wow.
what we'll do is once you've completed that work, what we're going to do is send you a percentage of that full amount of your invoice immediately. So it's like you finish the work, we're going to pay you in lieu of the customer, your customer paying you. And then what we'll do is on the back end is we'll go collect on that invoice at once they're ready to pay it. And then we pay back your loan, and we give you the remaining balance left. So we'll kind of get into loan structure and things like that. But that's as simple as it is. Basically, we're unlocking that cash flow that's tied up in your accounts receivable
Right.
immediately. And that's a real pain point for a lot of businesses out there.
Exactly. Even knowing that, I know, and you and I have talked about it, banks used to do this long time ago where they
Mhm.
provided this service. Now you can't go in the bank and get them to say, hey, I got this invoice, can you give me some money? So that's where you guys come in at, because people don't know you're an alternative to that. And I don't know if I want to say alternative. I mean, you all are it. I mean, because the banks is not doing it, right? So from what I gather, they're not doing it because we've actually tried that. So I'm thinking with you guys, people need to understand that when you say, and this is the part I like, and I want you to explain this if you would, it's not necessarily based on the client, and maybe we need to say ABC company is the one that's coming to you and they're going to bring you a housing, I'm just a government contract. That's what we're going to just say. So it's going to weigh more on that contract than it is on ABC company. Am I correct?
Right. So let's say there's a lot of different examples. So factoring companies are most typically worried about how your accounts receivable perform. They're not worried about your credit. They're not worried about how long you've been doing business. Typically, depends. We'll get into it.
Right.
But really, all they're looking for is good, solid accounts receivable. So, for instance, we helped a guy that was right out of the military. He didn't have any credit. The banks wouldn't even look at him because he didn't qualify for an SBA loan or anything like that. So we were able to take a look at it, and he didn't have any credit because he was just out of the military. And we got him set up and was able to, fund him on his first invoice and be able to process that invoice, get the shirts to his place, get them printed and shipped off to the military, and then, get that invoice paid. So where, if you have poor credit, if you
Or
have no
limited
credit,
credit, a lot of
limited
limited,
credit,
right.
if you're a brand new business, a startup, that's you have limited options, and factoring is a great option for you, so long as you're generating invoices to another business.
Exactly. And I want everybody to make sure you understand. He's saying, like, when you actually start, like, for instance, the guy you just mentioned, he actually had a startup business where he was doing t-shirts. So
Mhm.
now you got this contract and you got this order, and so you can get it done, but then you got to wait. And that means it holds up your money where you can't go in something else. That's when we need to reach out to you guys, right? So I'm thinking, if you would, can you walk us through a typical step-by-step process of how to factor and approve a fund, invoice?
Yeah, absolutely. So the whole process from start to beginning is typically either, your Jackie will reach out to me about you, or somebody will reach out to me, or you can reach out to factoring companies directly. And what they're going to do is the salesperson that you talk to are going to basically ask you a lot of questions about your business, how it operates. We're going to ask so many questions, you're going to be sick of us by the end of it. But that's really important for us, is to understand your process and how it works.
And
So,
so,
initially we're going to talk to you, make sure, do you have outstanding invoices? Are you going to have outstanding invoices? Who are you selling that product or that service to? Basic information. And then what we're going to do is we're going to gather, your customer list, your accounts receivable, your accounts payable, a handful of items. Typically, I'm talking in generalities. So the factoring company wants to look at your accounts receivables because that's the asset that we're lending on. Just like a home lender would lend on your home and take that as an asset, we do the same thing, but with invoices. So once we kind of get through that information and look for an approval and say, okay, we think that there's a path forward here, what we'll do is we'll kind of get into our deep dive underwriting process. So we're going to look at your accounts receivable, accounts payable, your financial statements. We're going to want a copy of your driver's license. I have all the documents here. So articles of incorporation, contracts with your customer are a big deal because those contracts basically are going to tell you how and when your customer is going to pay you, right? And so that contract is very important to us, making sure that there's no offsets on those accounts receivable. And if there are certain things or hurdles that we need to jump, we need to make sure that we structure that deal properly so that not only are we protected, but you're protected from not over advancing you too much money on the receivables because of something in the contract. We're going to want your insurance policy, your workman comps policy if you're a staffing company. And then kind of all that information, what we'll do is we're going to take all that information, we're going to do our general underwriting, and then what we're going to do is once we've made a decision where, yeah, I think that we can move forward, then we get into the actual process where we're going to talk to some of your largest customers, if not all of your customers. And a lot of people have apprehension to that, Jackie,
Right.
because, they've developed that relationship over years and years and years, and they've worked hard and that's their bread and butter. So I understand there's a lot of pain points with factoring invoices, but just know we aren't here to ruin your business or your relationship. We want you to succeed. And I think that's the big part, because honestly, if I have a factory or a company that's factoring with us, I don't want them factoring for forever. They need to graduate to bank financing and get better pricing on their financing, right? We're never going to be your first option. A factoring company should never be your first option, but we're there in case you need it. So our goal is always to get the customer back into a banking situation. And, people call the F word for a reason. Some people say it's a death knell for a company or whatever. And that's just baloney, because I've seen clients go from startups to national names that you would recognize.
Right.
And on the flip side, yeah, companies do go out of business, but that's general course of business.
Well, let's go back a little bit before we go further, because what the thing is with us being loan brokers, we have dealt with people with factoring. You know that we've talked on it. And so the first thing I want to say, we provide a list of everything. And then if you guys want to put in the chat, and I actually said it's like a general questionnaire is basically what it is, okay? So you can put in the chat and I can send that to you where it asks you those general questions that get that to you guys. And they're not so intrusive as people think. It's just basically giving a snapshot of what you look like as a business. And so that's one thing I want to mention. Also, contracts. People have to understand, a lot of people do contracts, but they don't do them right. Like you made the comment, you need to see how are you getting paid? What's the stipulation? Can you transfer this over? And see, we don't read that. So it's really important for you when you start getting this type in business, period, not just now, just that. Contracts are really important how they are set up. So one, you need to get one. Okay, let's get a contract. You know how that is. But the second thing you want to do is make sure it's written in a way where you can utilize it when you need to. Either, as my attorney said, we had an attorney come in that talked on it, is that the contract where we can actually go to litigations, it's properly written where we can. And also another lender can actually use it for factoring. You can use it with another lender for factoring. So I do want to mention that while you're saying that. For us the layout of everything. So other than that, is there anything else of the other layout before I go to the next question we have?
No, you make a great point about those contracts. A lot of companies will not allow you to factor because they've had bad experiences or whatever, So carving out a factoring piece in your contract, if you know that's what you're going to do, you can just simply add something in there saying, this is notice to the other party that these accounts may be assigned and sold to a factoring company. So, if you know that you're going to be doing factoring financing, it's a great one word or one sentence piece that you can put into your contract saying, yeah, I might sell and assign these to a factoring company. And then that protects you and allows you as a business owner to go and get the financing you need.
Now, let's say this too on that is that, well, let's talk about, and I mean, we're probably skipping my little questions, but I want to ask, saying that you say you should prepare yourself if you may need to use factoring, what type of businesses are best for factoring?
Okay. So literally any business who sells product and invoices on terms
Okay.
could potentially qualify for factoring.
Okay. Give us
Now,
some examples. Give me a few examples.
so low-hanging fruit transportation is the absolute biggest piece of
Mm,
factoring. So if you're a transportation, if you own a truck, it's highly likely that you're factoring already. If you own a small fleet of trucks, it's highly likely that you're factoring already or have some sort of relationship like that.
okay.
Staffing works really well, right? You have people working for another company. After that 2 weeks, you have to pay them, but that company's not going to pay you for 30, 45 days. You
Right,
still have to make that payroll. Factoring staffing typically gets higher advance rates because it's very cut and dry. It's, this is how much this person's supposed to get paid. So it factors very easily.
okay. Staffing.
I like government receivables. Government receivables are huge to some factoring companies.
Okay.
So if you have, contracts with the Department of Defense or any other government entity, we can really do a lot of work on that because, or other companies can as well, because there's a certain law that puts that all into place, and those receivables are guaranteed. So we specifically like military or not military,
Government.
but government work.
Government
Um,
contract. Okay.
some things, and I think this is a good point to talk about factoring companies and how much they differ from each other.
Okay.
I'm going to do very different deals in general than some of the other people that I speak with on a daily basis. And that's simply because they're more comfortable with a certain industry. So finding the right factoring company is a big deal, whether that's a bank, an independent lender, or whatever. Finding the right factoring company for your business is important. For instance, my company doesn't do medical receivables, but I know companies that do. So really finding that right factor and finding that right fit for you as a business owner is important.
So when you're saying basically we need to match up the industry, our industry, with the factoring company, because not all factoring company gonna do what we're gonna do. So that might
Right.
be the first question we need to ask them. Okay.
So some factoring companies only do transportation.
Oh,
Some
okay.
only do medical receivables. Some only do yada, yada, yada.
Right, right.
So there's transportation factors. There's general factors, which in our world, general means anything but transportation. And then there's factors who will do both. So
Okay. So we have that. So okay, so let's talk about the qualifications and eligibility. Now you did eligibility. You did talk about it a little bit, but let me ask something more specific. So what are the top criteria factoring providers use to qualify a business, especially for those with weaker credit but strong customers?
yep. So what we're going to do is in that underwriting process, we're going to run credit checks on all of your customers to make sure that those are strong. So, that is the key piece, is those bona fide strong accounts receivable to other companies. Now, you could be selling to another mom and pop shop and we might be able to get a $5,000, $10,000 credit limit. So just because you're selling to another small company doesn't automatically eliminate you from factoring.
Now, when you said the credit check is not on my customers personally, it's their business, right? Because you all can go and can you tell us where you go to go look those businesses up, they credit?
Yep. So depending on who you're working with, Dun and Bradstreet is
Okay.
kind of the industry standard, right? In some experiences, we use credit insurance companies like
Wow.
Allianz, or we use Atradius or whoever. So sometimes factors will use credit insurance as a way to obtain credit limits, and that's good if the factoring company is going to foot the bill for you, because then that's added protection for you as
Right.
a business owner, and it's not coming out of your pocket.
Okay.
So that bona fide accounts receivable, typically, credit scores you can even get down into the 500s, and
Right.
some factoring companies won't care, some will. It depends on if they're a bank or if they have certain, whatever their credit policy looks like. But really, if you own a business and you generate invoices to another business, that's a pre-qualification for factoring. So typically you're going to need terms on those invoices, and typically those, if they age out past 90 days, that's where it gets a little bit hard for factoring companies to do. So that's kind of what we're looking for mostly, in lieu of, strong personal credit, strong business history, that kind of stuff, which are what banks or, the SBA or other lenders are looking at.
Right. So we want to keep your invoices that below 90 days. You want to have your client, your customer list where your customers are paying, within that 90 days. That helps you to be a great, prospect for factoring. Okay, I got another question. Which industry do factoring specialize often target? Now, I know you mentioned like the trucking and staffing, and what type of invoice qualifies best. So you did mention those, but what type of invoices qualify best though? Is it a certain amount, like 5,000 minimum, 10,000 minimum? What is it?
So that depends on each factoring company. Typically, you're going to be based on a credit limit, and most factors, I would say, start about $25,000 credit limits. And that's a very small credit line within the industry, but that's kind of the minimum that any factor needs to really get going on this. And that's because, factoring takes a lot of back office work. We have people looking at, it's a very manual process still, even within this world of AI and everything, and everybody's trying to figure it out. But it takes a lot of time, a lot of manpower, to get all that stuff taken care of and done. So we want to make sure that, we're not, making a bad business decision for us if, you're only submitting $300 invoices once a week. So as far as the actual invoice size, I think I've factored smaller invoices down to $100 individually. So now really I think in general, factoring companies like, decent sized invoices, chunks, but really anything will do, so long as it fits within our credit profile.
Now I have a question because I did have a client ask me about it, and I told him I would ask you as well, because they're contemplating doing the factoring, and they had a good question. Question is, when is it best? Do you want, as a factoring company, they give you one invoice, or you want all their invoices that they have outstanding? How does that work?
Again, that's gonna vary factor to factor. I think the biggest piece here is talk to the salesperson that you're working with. Ask them that question, because that question is very important. And the reason being is if you assign a customer to a factoring company, you might not have to finance all the invoices for that, but all the payments need to go to the factoring company. And the reason is because that's how they get paid back. So if you were to, because when you start this up, we're going to say, hey, we're going to be factoring these invoices for Jackie's company. The payments now need to come to us on this account. Right. So when those payments come to us, we make sure that we get those payments and pay off the invoices. Now, if we get money on an invoice that you didn't finance with us, what we do is we send that money back to you without taking any fees or anything like that. Right. That's what in the industry we call a non-factored invoice. And that just simply means we didn't factor this, but you still received your payment on it. So this is going to go into your checking account with us. And then the next time you request money, we're going to send that money to you.
And so we need to be real careful and understand this too, that when you talk factoring, it's really for the companies that factoring work for. And like if you're a staffing company and you have a clientele, those people are already used to people factoring. So they it's not like, oh, what is this? It's not. They're already familiar with that. If you have a contract from the government, they're used to people calling them on that. So we need to know not to run from that just because we're not familiar with it. Bigger companies and startup companies have used this, and they use it a lot. So I do want to put that in there and iterate it to everybody to know that's how that would really work. Let's go with our next one. So what are the common mistakes do business owners make when they are starting a factoring, and how can they avoid them for a maximum benefit?
Okay, so the first one, I think the biggest thing is make sure you have enough margins in your profit to pay for the financing, because the financing can get pretty expensive. So, you need to make sure that you're running a successful business within that. In addition, some other things that have happened in my heyday. So we'll start with a factoring line, and we finance a bunch of invoices,
Mhm.
but maybe there's a payment that slipped through in the meantime between the time that we funded and the time that the end company was notified that, hey, we're supposed to receive all these payments. So Jackie, let's just make this example. Let's say we financed you on this invoice, but you still got the check on it. Um, you know, you cash the check and forget to tell the factoring company. That's the worst thing that you can do other than outright fraud. So
Oh,
I just want
wow.
to I want to drive that point home. That's what we call conversion or converting money. And so basically what happens is, let's say we paid you $1,000 on an invoice.
Okay.
We gave you $800 up front, and then you also got the $1,000 payment for that invoice. Okay.
Oh,
So that money was supposed to come to me so I can pay off your loan and send you out the balance. Now you've kind of double dipped is what we call it. And
mm,
that's called converting funds. And that's a huge mistake that's made
right.
a lot of times. And it can really, things can go awry very quickly with your finance company if you do that. So if you do get a check in the meantime, after the first funding, let your factoring company know, say, hey, I got this. Do you want me to send it to you? How do you want me to get this to you? So that's just kind of another example
Right.
of mistakes. Not reading the contract that you have with your factoring company is also a huge liability. Make sure you know it. Some factoring companies want a yearly contract, and that's pretty typical within our industry. Some don't. Some lock you into longer contracts. So make sure you really understand, get your business attorney involved. It's a legal document. You should definitely have it reviewed. And even though, you might be desperate for that financing, it's going to save you a lot of pain in the long run. So
So
make sure you know what
let
you're
me make sure.
signing.
Let me see if I got this right. So what you're saying, Travis, that you do have to have all the contracts, all the invoice. So once I start invoicing with you, factoring with you with my invoices, I have to give you all my invoices that's coming through, even the non-factored ones too.
You don't have to finance. We need the payments coming in. Let's clarify that.
Okay.
So if you finance with, let's say you own a company and you're invoicing me for work that you're doing for me,
Okay.
all the payments that I send to you now need to go to the factoring company.
Okay. Okay.
So if you finance with one invoice with one customer, you want all those payments going to the
But
factoring
that was
company.
not the other three clients I have. You don't want that money. You just want the one we factor.
Correct.
Okay, okay. All right. Well, make sure we got that cleared up. Okay, that makes a lot of sense. Okay, let's go to our next one. Now, based on your years of experience, okay, what strategies have helped clients scale their business that uses this tool?
Right. So, there's a lot of ways to help you scale with this. So, um, you know, getting the injection of cash immediately when you need it is a big deal, right?
Right.
Because, you can talk about, finance and all that kind of stuff. But the fact of the matter is you're getting paid immediately on this invoice. So that means that you're also paying money to finance the invoice. So
Okay.
make sure you're using that money to grow your business. Maybe buy supplies, product or outreach to new customers. Use it to grow your business. Try not to use it to finance losses. I mean, it can work, but you need a path forward, whether that's raising prices or cutting costs. Finding a way to make that work in the long run
Right.
is going to help your business and be exponentially better for you.
Yeah. Okay. Great. Okay. Let's talk a little bit about the cost and the financial impact of factoring. Okay. All right. So, what factoring fees should business owners expect? And then we have a question after this, okay?
Okay.
What factoring fees should business owners expect from providers? And how do they calculate the true cost compared to other finance options?
Okay. So this is a broad-ranging question. So financing costs, I'm going to give you a really big range here. Can go anywhere typically from 10, 12%, a larger line with an established company up to, 40, 50 plus percent. It just
Hmm.
depends on the factoring company, the deal that you make, and how long you've been in business. Typically, you're going to range anywhere in the teens to 20s. And there's, depending on the contract, and there's a whole bunch of stuff that can be calculated into how much you're paying. But really, there's going to be one or two main fees. One is like a mortgage interest rate almost,
Okay.
where you're paying a percentage based off your loan amount. Another are invoice fees, which are much more common in factoring. So, for instance, let's say it's 2% for 30 days.
Okay.
That is pretty typical within our world. Some are going to be higher, some are going to be lower. It just depends on where you're looking at. And so it's kind of hard to calculate. I mean, you could probably get an accountant and somebody way smarter than me. But typically how I look at it, depending on startup costs, some factors will charge an application fee or an underwriting fee or an origination fee. So you got to calculate those in as well. But typically you can just take the percentage that they're giving you, let's say 2% for 30 days. Well, if you multiply that by 12, it's about 24%. Now, depending on, exactly what else is in that contract and how quickly your invoice pays, that cost will fluctuate, depending on those
Depending on
scenarios.
those. Okay. Let's go to, we have a question from Miss Charlotte, which is a great one. She's asking about the staffing. She said, Travis, from a staffing company perspective, will it be per employee that's hired that you're actually doing that with, or how would that work?
Typically in my experience, what they'll do is, if there's only one employee working, then yeah, absolutely. Typically, if, let's say you have 10 employees working for the company, you'll invoice them after 2 weeks for all 10 employees. Now we're going to want that invoice for all 10 employees, but we're also going to want those timesheets as well as our backup material. So depending on how you invoice, you can invoice for one person individually, or you can just send on the entire invoice.
And the staffing got them working at different companies. So if they all at different companies, it doesn't matter. They can just pick and choose which ones they're gonna send over to you, is what you're saying, right? Okay.
Right.
Employee. Okay, good. All right, that's a good one. Okay, good question. Good question. All right, and thank you for that answer. Okay, so our next one we have is basically, how can a business owner prepare paperwork or we say customer details to get approved faster when it comes to factoring? What's the paperwork we have?
Yep. So minimum, get the application back with any requested documents they have on that. Typically, application, accounts receivable, accounts payable, we kind of already talked about it.
Right.
Make sure you have 3 months of bank statements available. They're going to want to look to see, how much payments you are getting in to legitimately verify that business. Your articles of incorporation, any of those contracts that you have with your customers, and then make sure you have your insurance policies, your tax returns, financial statements, your operating agreement, driver's license copy. We always need that. Jackie, I do want to take this opportunity to talk about, we see a lot of fraud within this industry, unfortunately.
Okay.
So we're asking all these questions typically while we're gathering information, because we're trying to prevent ourselves from all the fraudsters out there.
Right.
And it makes it a worse situation for everybody because they're out there. So, we do have to be very thorough about these type of things during the underwriting process to make sure, you're a legitimate business. And so we're going to ask you for all that information. And if the more organized you are, the more you know about your business, obviously you're living it, so you know it. And the more responsive you are, depends on the time frame on how quickly you can get funded. And that funding timeline can be, it ranges vastly. I've seen deals funded in 3-4 days, and I've seen deals that took a year to fund. So depending on how tough it is, how many hurdles we have to jump, but the more organized you can be as a business owner and responsive, and even getting your clients to respond to us during our verifications and collections, that everything that you can do to help us, we're going to do in turn to help you.
And what we do, we provide a list to let them know the lender's looking for this, so you'll know what to pull together so we can get everything to them. As loan brokers, that's one of our main things. We want to make sure that the package is together where it makes it easy for you guys to pre-qualify them and to move forward with that. So that's something that's really important. Everybody want to know. I want to ask also, like, we having a certain, well, I don't know if it's a surge, but it's a lot of manufacturing. that's going up in Texas. Okay. So I haven't heard people talk on it as much, but is manufacturing something you all would like to do, these startup manufacturers and stuff?
Yeah, absolutely. It definitely falls within our box. It also
Okay.
falls within a lot of other people's boxes. So, tell you a story. I used to finance a steel fabricator. They would buy raw steel. We'd go down to their mill, see them roll it out and cut it all up and turn it into dumpsters. And it's funny because I still see dumpsters with their name on it out here in Salt Lake. So, that's a perfect example where they're a manufacturer of dumpsters, and it works well, right? Because, large waste management companies, cities, municipalities, things like that.
Take days to months to pay you. So that comes good that we can use that. Oh, and you're right. We said government, but like you said, you like state and federal contracts at that point. That's what we can do. And what I like about this, you and I had talked about it. You can be like you talked about your guy in military, startup people that get contracts. There's a lot of contracts out there. Even though we have a lot of stuff going on, we have had some purchase orders or we've had people with contracts that they've already filled and they're looking for money. So I know those things are something we need to look at the industry. And I have some brokers that's on here as well that they can be aware of. And that's why I want to kind of have them to come in and listen to you of how that works and what type of clientele that they need to kind of go after. So manufacturer is something you said that would work really good with you guys. And they can be startups, right? They can just be starting up.
Depending on the factoring company, some people will do startups, other people won't. So again, it's finding that right factoring company. But for instance, we do, for instance, startups. So
Right.
others won't. The other thing that you mentioned was PO financing. So some factoring companies will also do your PO financing piece. So currently I'm looking.
Explain that PO because
Yep.
me and you talked about how we got that difference. Explain the difference. Explain that.
So within the accounts receivable process, right, sometimes you have to buy something in order to get it to the end user. So in this instance, I'm going to use this gentleman in Las Vegas. He owns an HVAC company. He has to install these giant water efficient coolers into municipalities, casinos, things like that. Those machines he doesn't manufacture. He buys them from a distributor. So this is a perfect example of where PO financing would come in and work in handy. So what you can do is, okay, I have a PO, let's say from Bellagio, I don't know, and they need me to reinstall this giant, AC unit, but I'm going to get a deposit from Bellagio, but maybe that doesn't cover all the costs.
Everything.
So what you can do is find a factoring company who also does PO financing, and they'll say, okay, this piece of equipment is going to cost you $100,000 to buy. The customer gave you $50,000 deposit, we'll advance the $50,000 for you to get that release from the distributor. Now, that's very early in the accounts receivable process, right? It will eventually become a receivable once it's installed. So what we'll do is, okay, we'll advance you $50,000 up front. When you bill this, maybe you're billing $250,000. So once you've installed it, we'll pay off that purchase order financing loan, and then advance you more money on the accounts receivable, right? Because you only need $50,000 for the small little piece for this piece. So basically, it gets your product released without fronting all the cash. Or typically, it's really great if you can get your customer to put a deposit down to pay for the cost to get it released. But if you can't, talk to your factoring company. That could work, and they might be able to do something for you a little bit earlier in that process.
Okay. That makes a lot of sense of the PO because now you just said, I think I want to make sure I got it right. So the PO, I don't have to have a deposit from the state to do it. If they doing it, I just need to have that contract. Okay. And then you all can put that and then I can get that ordered and done. That's good to know because that's hard to fund. That is really hard to fund. So I think that's great. We got another question, and it's about technology and data centers and IT cybersecurity. Would they be a good candidate for factoring and why?
So I am in discussions with a data center right now. Salt Lake is a hotbed for data centers. We have a lot, and we're looking to put in more. Absolutely something that we can do. So this client is manufacturing, I don't know, something, I know what it is, but I don't want to say it, a widget to go inside of a data center. And so what we're doing is we're going to be financing those invoices as they install the certain things within the data center, then we'll bill, or they'll bill the data center and then they'll pay us. So data centers, some technology, again, it all depends on those service agreements. And typically, if it's like a maintenance style, like I used to be in the software world where, it's an annual maintenance that can be a little bit harder for us to finance because typically those are prepaid. So that's a little bit tougher to do. But again, talk to your factoring company. If you're invoicing another business for services that you do, I'm sure there's a factor that would love to look at that and try and figure that out.
Right. And that's like our brokers, like I said, they're picking out who they're going with. So I have some that's kind of focusing on the data and the manufacturing. So you're saying those clients will be good, and it's based on their customer list, right? Or what they have. Yeah, that's something we just have to kind of remember with that. Okay.
Yeah, so just real quick on that. So this company that we're trying to finance, they're newer, they're just kind of starting up, but they're billing these billion-dollar tech companies. So it's perfect, right?
Oh.
So
yeah, so that's how that can work. Okay, it sounds pretty good. I love how all this kind of comes together. So let's look at this. What's the features that set top factoring options apart? Like the no fee setup, a single invoice program. So what features set them apart? Because I know you said it's a lot of them. So what are some features?
Oh man, so big banks. Yeah, so customer service, I mean, really get somebody who understands you and your business, where you're coming from. Customer service is key. They should be responsive to you throughout the process. They should be helping you get through that process. There's a lot of really wonderful people within my industry that I've grown to know over the years. And, the people who make it long in this business are the people who have integrity and who value their customer relationships and value their clients. So first and foremost, find somebody who is good for you, but also, pricing is an issue, right? Yeah. So pricing is going to set other people apart. Banks who do factoring. I used to work for a bank factor. My wife currently works for one. And they're going to be cheaper than us, right? But we're able to maybe be a little bit more creative, get you a little bit more money on the advance rate. So there's going to be pros and cons to whoever you end up with. Finding somebody that you're comfortable with, that you've built a relationship with, that fits your structure that you need. That's kind of the key, what you're looking for.
Okay, and we'll be trying to do that. Okay, great. Well, listen, I don't know if anybody have any other questions. Like I say, he's here, so you can kind of ask them some questions. I know I had somebody was talking about construction. We've actually reached out to certain factors, and they don't do construction. Do you guys do construction, right?
Yeah, a lot of people won't touch it. But some people will. It just depends on their risk appetite and what they like.
So explain to us what construction factoring look like. Is it like it got to be a sub, or you can't do anyone that's doing draws? I mean, it's so much stuff. So what in construction, what does it have to be in order for you to accept a construction client?
For me, typically, I've always done subcontractors. Okay. It's a little bit harder to do general contractors. There's surety bonds and all sorts of stuff that trip us up. So typically a sub is ideal. Somebody who's installing something or working on something with milestone billing, not progress. Progress is a little bit tougher for people to do. And wait
a minute, what's milestone and what's progress billing?
Okay, so let's say I am doing, let's make it easy. I'm framing each floor of this 3-story building. Okay. Maybe I've put in something in my contract where I'm going to bill milestone by floor completion. So once I've framed out the first floor, that's a milestone, and I can bill at that point. Okay. That's a great example. Progress billing is just saying, okay, we're getting near the end of February. I'm going to finish up what else I can do on this first floor, but it's not going to be finished, but I'm going to bill you for whatever I've done. That's progress billing.
What you've done billing. Okay, gotcha.
Right.
So you like those, right?
We like milestone billing, and most factors like milestone billing, because then it creates, what it does is in the contract is it creates a definition of an acceptable place to invoice, which is what we like to see, right? This contract that you have says you can invoice once you've finished the first floor. So you invoice and we're squared away because that contract allows it.
Okay,
Does
you
that make
like
sense?
that one. That's the one you all would prefer.
That's the one that we prefer. There are people who will do progress billing. Like I said, it's finding that right niche and finding that right lender. And I think that's kind of an advantage with me is I refer out a lot of deals to other factoring companies because we can't do it, and I know that they're a better fit. We do it all. We do that all the time within factoring. The people who've been around a long time.
Okay, well, I know like Charlotte mentioned, which is so true, Charlotte, that we have a lot of construction going on in Dallas, Fort Worth right now, which is true. But the biggest thing that we're seeing, even when we talk to them, and that's why I brought you on, a lot of contractors are not aware of how the factoring work and that they can actually use that. So just before we leave, if you could, we do want to focus on that a little bit more. If you can give us some insights of how we can let these guys know how it works or something like that, because you've been dealing with it. So how do we approach these contractors? You're talking about not general contractors, right? We're talking about subcontractors. So how do we approach those if we want to go out and approach them to bring them into factoring?
Yeah, I would just say, so obviously with construction, there's always some retainage held back till the project's finished, right? Okay. So typically construction advance rates are going to be lower than general factoring advance rates. They're going to be on that 60, maybe 70, if you're lucky, 80% advance rate side. Okay. But typically, a little bit lower advance rate because we know there's that retainage built in. And for those that don't know, retainage is basically 10% of the invoiced amount in case the general contractor has to fix anything at the end. They hold that money until the project's complete. Now, once that's done, I do have, the other thing is we'll find a home for anything. I have a company who is financing, $8 million in retainage on this project. So even though I couldn't do it, I know who could. Right. So typically, make sure if you can add in milestone billing, do it. Make sure that you have, good contacts with the general contractor in accounts payable. Let them know that you're going to be factoring. But yeah, typically, if you can get that milestone within that contract, it helps a lot of factoring companies out.
Right, by doing that. Okay, and letting the contractors, the subcontractors know it's available. Okay, well, first of all, again, I want to thank you, but I wanted to ask you, just in case we're about to go, to see if it's anything you would like our audience to know dealing with factoring before we leave.
Yeah, it's a tool, and it's meant to be used in the right situations. Don't be afraid of it. There's a lot of negative connotations that have been out there for years. I would argue to the death that factoring can be used properly. And, again, your factoring company wants you to succeed, because if you succeed, they're gonna succeed as well, and they want you to eventually leave to go get a big SBA loan or something, right? We want you to succeed, because if you leave us and you're still in business and you're still running along, that means that we've done our job. We've put you in a position to succeed as a business owner, and onward and upward from there. And talk to your factoring company. Be open about it. Say, hey, I eventually want to get back to a bank line. Make sure your agreement and when you can get out of it. And also, they might be able to refer you to a bank. We talk to bankers every single day because that's where a lot of our deals come from, because the banks can't finance it. So where do they go? They come to us. So we always want to get you back to your banker, whoever that may be. That's always our goal. We're not in it to see you go out of business or anything like that. We want you to succeed.
Okay, well, thank you so much. Again, we're just showing factoring is another alternative to lending. Is it lending, or you say funding? Somebody say you all don't put that with you all.
Lending, funding, whatever.
Okay.
It's all semantics. It's like factoring and AR financing or invoice financing. It's all the same thing at the end of the day.
We're good. Well, look, we all want to thank you so much for being here and giving us information. Guys, I want you all to know Travis is one of our direct lenders for factoring. So if you all want to get in touch with him, you want to do anything, reach out to us because we do work with him on our factoring files. That's why we want him to come in and talk to everybody. And again, like I said, I want to thank everybody for being here. I want to thank you again, Mr. Travis, for coming in and Wilting.
Thanks for having me. It's always fun talking to you and get to know you a little bit more. So
I know, is it every time. So we want to thank you too. So what we'll do, this will be available on our YouTube, is TDJ Equity Funding Insiders. We'll have this available as well as on the podcast. Any platform that you all listen to, you actually can go and listen as well. We will have some information available on him for anybody to reach out to us so we can get you started, as well as the application that he has given us that we have to give to you all as well. So until next time, you all have a good day. Take care, and we'll see you next time. Thank you.
We hope you enjoyed this episode of TDJ Equity Funding Insiders Podcast. If you'd like to be a guest or get in touch with us, please visit our website at tdjequityllc.net/podcast or email us at podcast@tdjequityfundinginsiders.net. Until next time, take care.